Alright, so what I'm going to be talking about in this video is liquidity. Alright, liquidity is the most important thing in forex. What moves price, what moves the market is liquidity. Liquidity simply means money. All these candles that you are seeing right here, these are movements of money, and what moves it is liquidity, which is money. It serves as a fuel. It serves as a fuel that moves price. Once price is liquidity, it always goes to that direction to take it. So you already know about support and resistance. You are going to be leaving that for now, because that support and resistance is going to be your liquidity. To simplify everything, liquidity means unmitigated highs and low. You see, all those highs and low that price have not taken, those are liquidity. For example, let me start afresh and be putting all these things, so you will, let's say in this place, this is 1 hour time frame. In higher time frame, that's the best time frame to detect liquidity, to see where money is, especially one daily time frame. You see, this is daily time frame. You see this, let me use this arrow. You see this low right here. Price made a low and then go up, create another higher low, another higher low, another. All these are liquidity. All these lows that people will be saying, as beginners, they will tell you that this is support level, but as an advanced forex trader, you don't do that bullshit. These things are liquidity. Normally they will tell you that once price comes to this level, it will go up. No, as an advanced trader, you need to wait for price to take it as liquidity, and this is what I'm going to be teaching you. So when you see this kind of thing, you just add your line there and expect price to take it. These are levels of liquidity. These are liquidity. Alright, so as it stands, I'm still waiting for price to come down and take this one. That is, price have taken this liquidity already. You can see price have broken this low. So two things can happen now. Is either price goes up, reverse after taking this, or it continues to go down, which is going to bring the types of liquidity. We have two types of liquidity, which is the liquidity grab and the liquidity run. Liquidity grab simply means when price comes and takes liquidity, then it reverse. Liquidity run is when price takes liquidity and continue to go to that direction is going. That's liquidity run. So I'm going to be showing you some examples and other explanation about it. So this is a typical example of liquidity run. You see this high right here is a liquidity. You know, as a beginner class, they will tell you that this high is a resistance level. Now when price reaches there, it will sell. But as an advanced class, we see it as liquidity. We want price to go and take it. So in liquidity run, price takes liquidity and continue going. It comes back and retests to that level. In most cases, it doesn't come back and retest. It just continues to go up. So this is what we call a liquidity run. Price just tests the liquidity and continue going up. That's liquidity run. Then let me show you an example of liquidity grab. So this is a typical example of liquidity grab. So you see this low right here. Price comes down and take this low. Instead of it to continue to go down, it reversed and go up. So as a beginner trader, if you are expecting price to come down here and start buying immediately, you see why many people lose their money, because they teach you that this is a support level, but this is a liquidity. If you are buying here, price will only come and take your SL and continue to go up. and in so doing you will lose your money. So let me go back to 1 hour time frame, which is the best time frame that we'll be using, and let me show you the liquidity I am expecting in this price right here. Let me delete this. This high right here is a liquidity. You normally see it when price is consolidating. Also, this low right here is liquidity. Okay, so two things is applicable right here. Is either price goes up, take this liquidity and reverse, or it takes the liquidity and continue to go up. So there is another way to know what price is going to do after taking the liquidity. So as it stands now, all I can do is to wait for price to take the liquidity, then I will now see if it's going to reverse or if it's going to go up. That is when you will take your trade. If it comes down and take this liquidity, you now check if it's going to reverse or if it's going to continue. So let me show you other examples of liquidity. So this is another example of liquidity right here. See this, you see this high right here. Price came up, took the high and reverse. So you see liquidity, it does not close above this high with full body candle. It will just wick it. It will just close with a wick and it comes down. Let me go down to lower time frame so that you will see what really happened here. Let me go to 5 minutes time frame and show you what really happened there. So this is that place I was showing you. So this is how it looks like in 5 minutes time frame. You see how price came up. This is that high I was showing you in 1 hour time frame. So price came up and took the high. You see it broke it. So you see the reason why price broke this is because this is liquidity. Many people started selling from here, so price needs to go up and take that money. So many beginner traders will start buying here thinking that price have broken the high. So you see what it will do, it will form an emo pattern in 5 minutes candle. I'm not teaching you pattern, no. What I need you to understand here is the liquidity. Just understand that those levels that you see as support and resistance, they are liquidity, right? So look at another example of liquidity right here. This low right here, this low, you see how price came down, took the low and reverse. So this is, if you master this liquidity, the kind of money you will be making in forex, you won't believe it. Imagine taking all those losses, all those things that makes you to lose money, you start trending against it. So look at another example of liquidity run. I told you have liquidity grab and liquidity run. Those ones I show you are liquidity grab. So this one is liquidity run. This one I'm going to show you right here. So you see how price came and took this low. This is a low. It's a support level, which is liquidity. So I'm telling you, those levels that you are seeing as support and resistance, they are liquidity. You see how price took it, reversed, then made a liquidity run. So we actually have a liquidity grab here and also a liquidity run, two things in a place. So if you use this, you are going to be making a buy. After making profit from a buy, you still make a profit from a sell if you master it. So right now I'm just showing you how to master this liquidity. Once you master it, we now move over to how you can use it and trade. So I'll be showing you so many examples of liquidity. There are some liquidity that you won't even notice, but you need to look very well, open your eyes before you can see it. You see this low, it's a liquidity. Liquidity can come in so many ways. It can come in only one low, it can come in double bottom. You see 1, 2, you have 2 lows. This is awesome. You see how price came down and took the liquidity, and you see it does not close below it. It just wicks it, wicked, then create another liquidity right here, come down. This is a liquidity run. You see it took the price, it took the liquidity and continued to go down. In liquidity grab, it will take it and reverse, but this one does not reverse, showing you that it is liquidity run. It took it, then look at what actually happened inside this. Let me zoom it. You will see this new liquidity that it created. It took the liquidity. Look at this candle, it broke this high and then reverse. That is liquidity grab, which is very awesome. Liquidity grab. But if you are looking at it like this, you will not even see that it took this high. So you need to zoom your screen so that you will see it very well. See, liquidity just took the liquidity and continue selling, right? So let me show you other examples of liquidity. So there are many ways liquidity can be taken, but for now let me just show you the liquidity of support and resistance. That's what I'm showing you. In another video I will show you liquidity of trend line liquidity. So this is another liquidity, right? You can see price took this high. This is the high. Price came down, broke the high and reversed. So that's how you know liquidity. This is your resistance level, right? As you are being taught, they teach you this as resistance level, but now I'm telling you that start seeing it as liquidity and stop seeing it as resistance level. It's a resistance level, right? But it's a liquidity. Price does not respect all those rubbish. Price violates it, takes it, and you will lose your money. That's why many people keep losing money when they are trading support and resistance. Support and resistance work most time. Like see here, this is a low, price reach this low and reverse. But when you see it as liquidity, you will be much safer. You will be much safer seeing it as liquidity. So let's continue looking for other examples. This is another liquidity. This high right here is a liquidity. You see how price, let me use that arrow so that you see what I'm showing you. See how price took this high and reverse. See how price broke this high and come down. That's liquidity for you. All I want you to do for me is start seeing those your support and resistance level as liquidity. Start seeing them as liquidity. You see this one, this high right here, this one also, price took it and came down, created another high right here, took it and reversed. So all these are liquidity. They are liquidity. Okay, so you see another example. There are many. This is liquidity. Like liquidity is what moves price. Once price does liquidity, it continues moving to where it wants to go. And the other thing you need to understand in forex, in as much as the same thing applies in all pairs, what you need to do is master one pair first. Just find one pair and master. I love using vix25 and vix25. Doesn't mean that it does not happen in other pairs, but it happens in a significant other ways. Okay, so in order for you to avoid loss and for you to have precision, just be trading few pairs, even if it's only one. Once you start through the day, you don't see entry, you leave it. So I think for now that's all I can show you in liquidity. For now, liquidity is broad. It takes time to master. but with time, once you keep practicing, keep looking in your chart, keep noting out, just be mark. Once you enter the chart, look for all the nearest highs and lows and mark it out as liquidity. That's what you'll be doing. Mark them out, then wait for price to take it and see the reaction of price. Like this one is what I'm looking at now. This is the high and this is the low, so I'm expecting price to go and take this high. Either after taking the high, either it reverse or it continues to go up. Also this low, if it tests this low, is either it reverse or it continues to come down. These are the two things that can only happen, nothing more, nothing less. So that's it. Then that's it for now.